What is up, YouTube? I'm Adam Odell, Chief Investment Strategist at moneyandmarkets.com, and I'm joined again by my research analyst, Matt Clark, this week for another episode of Ask Adam Anything, where we take questions from our own subscribers, our own readers, as well as anybody who's perusing our work here on YouTube. So please leave a comment below with any questions you may have. And you can also email us. So this week, is it a buyer's market? Is it a seller's market? We're certainly in a bear market, a lot of the major indexes, and certainly a number of individual stocks. So we'll talk about what to do in a bear market, but certainly is a good buyer's market as well. So it's kind of it depends on your time frame and what you're looking to do. Isn't that right, Matt?
Yeah, you're right. And it's just, you have to know what to look for. And that said, first off, today, what I'm going to do, Adam, is I'm going to talk to you. I want to talk to you about a particular way that trades in this type of market condition that would do well. But first, you lead into a good point, and that is that, there's a lot of I don't want to necessarily say panic in the market now, but there's a lot of people that are really left kind of struggling and wondering what to do. Market's down, then it's bouncing up. Is it a dead cat bounce? Is it a long-term thing? But I think I'd be remiss if I didn't mention that coming up on June 6th, I believe, June 9th, I'm sorry, you're actually going to be talking about this very thing. And I want to kind of give you an opportunity to give a little more detail on what that is.
Yeah, so to find incredible returns in the stock market, a lot of it does come down to timing. A lot of people say you can't time the market, but that's just not true. I've been doing this for nearly 20 years, and you can absolutely time the market. Now, that doesn't mean you pick a perfect top and a perfect bottom, but you can pay attention to evaluations. And the truth of the matter is, if you're really looking for monster returns, like plus 1,000% or more, there's only certain windows of opportunity within a full market cycle to buy stocks at attractive enough valuations to really get an 1,000% return over a few years' time, or is even as short as 1 year for some stocks. And really, those are during down markets. So everybody kind of freezes during a down market. They see the value of their holdings going down. If they're over leveraged, they don't have any cash on hand. That's really why we preach diversification, prudent position sizing, and keeping cash on hand, or dry powder, so to speak. I keep a list of stocks that I want to buy if they drop 50 to 70%. And that's really what I'm combing through these days. So I think this is a buyer's market long term. I think that the valuations that got lofty over the last few years have come down considerably, and they could come down even more. So I'm really excited about it. I've developed a new strategy. It's based on the algorithm that's run my option trading service for over 10 years now. One of the rules is we only buy things that are already going up. And another one of the rules is we only buy things that are going up faster than the overall market. So we're not trying to catch falling knives here. This bear market is an absolute gift. It's really why I kind of fast-tracked the launch of this program, because I thought, the majority of these buying opportunities are going to develop over the next 1 to 3 to 6 months. And really what we're doing is targeting, purchasing stocks that can rise 1,000% or more in as little as a year. And really, you and I did the research, and there's been over 115 stocks per year that have risen 1,000% in a year or so. So those stocks are out there. I believe that my system is really well tuned to find them, and that's what I'm asking folks to join me on. But yeah, I'll give more details. I can't really go into it too much now, but we're going to launch the program on June 9th at 4 p.m. And we hope that a lot of people will sign up for the presentation. The presentation's free, so you can learn more about it and see if it's right for you.
And we'll put a link up top here so you can find out more about signing up. And yeah, these types of opportunities are coming out of market conditions that have been similar to what we're experiencing right now. So this is a perfect opportunity to learn more about that. Again, link up top, and you'll find out much more about this presentation coming up on June 9th. Now, to lead back into what we're talking about, tech. You and I, Charles Sizemore, we love tech. We love biotech. We love artificial intelligence. These are mega trends that we watch very carefully. But if you've noticed over the last, and I know you have, but if many people have noticed over the last several months, tech has just been taking an absolute beating in the market. The NASDAQ has been absolutely crushed over the last month and a half. So I guess the question here is there's a lot of people that have that mindset that tech is still the way to go. However, when you're looking at market conditions the way they are now, it's kind of a, whoa, wait a minute, let's pump the brakes. But that's not necessarily the best way you can play it. So I kind of want to talk about that a little bit. And I know you've got an idea, a stock that might actually do well in market conditions like this, especially when it's related to tech.
Yeah, so this is actually a short tech trade. I mean, everybody knows, anybody that's paying any attention has heard of Cathie Wood at ARK Invest. Her flagship fund is ARKK, ARKK. It's an ETF that is actively managed, that holds stocks that are disruptors, that are innovators, that are, a lot of them are newer companies that aren't necessarily profitable yet, but they are the future. And as you said, Matt, we believe in technology and innovation, but there is a point where valuations get out of control. You do have to consider the fact that we're in a bear market and you don't know how much further these stocks are going to fall. I think ARKK is down about 72% so far from their peak, from the fund's peak in February of 2021. But basically, there's an ETF that launched last November, about 6 months ago, that is short ARKK. So if you believe that the valuations in those ARKK stocks are still too high, if you think the selling will still continue, if you think that ARKK has not found the bottom, and if you think the bear market is going to last a while longer, then you should at least consider having a look at this fund. Now, the ticker symbol for this fund is SARK. Basically short ARK, as I would read it. It's managed by Total Capital Management, and it was launched on November 9th of 2021. It's up it's over 100%, about 103, 105% since inception. Year to date, it's up 68%, whereas ARKK is down 55% year to date. So I will say that the fund is meant to give inverse price performance to ARKK on a one-day basis. So if you read the disclosure documents, the prospectus of the fund, it will say that it's not necessarily well suited for buy and hold investors. So do your research and consider, if you do want to make a trade on that for more than a day. But it's really one of those things that, it's not necessarily going to be a buy and hold for 3 to 5 years. I mean, let's face it, bear markets last much less time than bull markets. But this is something you would want to consider trading or buying as a short to medium term hedge, particularly if your portfolio is, really long a lot of these innovation technology type of companies.
And, right now I look at this, like I said, you're right. Since inception, it's up about 103, 104%, trading well above its 50-day simple moving average. Blowing away its asset class in terms of performance. This thing has just gone up like gangbusters because it is inverse to what we're seeing of the NASDAQ, which has just gone down exponentially over the last couple months. You said this is a short-term to medium-term play. I mean, if you're kind of a novice investor and you're looking at this, what's an ideal timeline? I mean, how would you look at getting in and getting out of this?
So when I talk about short to medium term, I'm not talking about day trading necessarily. In Cycle 9 Alert, Home Run Profits, originally called Cycle 9 Alert, we do swing trading with options, and our holding period is anywhere from 2 to 3 months. So swing trading can be as little as 2 weeks, and kind of on the upper end, 3 or 4 months or so. So that's what I would be looking at. Typically, again, bear markets last not as long as bull markets. We're already and maybe a third or 2/3 of the way through the bear market potentially. So this was not necessarily a buy and hold, but more of a trade. And when I think about trades as well, I think about using stop losses. I would not necessarily recommend buying options on SARK or on ARKK unless you're a seasoned options trader and want to do some very short-term trading. But you'd have to know what you're getting into. But if you're just buying shares of the ETF, let's say you think the bear market's going to last a while longer and you want to kind of hedge some of your technology holdings, then you could buy SARK and you do a stop loss that's 5 or 10% below your purchase price. Anytime I'm doing a medium term trade, I'm trying to get 3 to 5 times as much profit potential as I have on the losing side. So for instance, right now, SARK is trading for about $63 or so. You could probably put a stop loss at $58. So we're talking about a $5 per share stop loss. And then you would be looking for anywhere from a $15 to $25 profit target on that trade, which would give you 3 to 5 times your stop loss level. So that's kind of what I'm talking about when we're talking about a short to medium term trade. or again, a hedge, if your portfolio is tracking more closely to the NASDAQ 100, or if you own shares of ARKK and you want to hedge some of that out, then I think that SARK is a good option.
So bottom line here, and this kind of circles back to a broader point that we talked about earlier, and that is that the markets are down, but what we do is we try to find ways to find profit even in those down times, because there is profit to be made. I mean, just because it's a bear market doesn't mean everything is down, and it doesn't mean there aren't ways to find stocks, ETFs, other instruments out there that can bolster profits even in a down market. And SARK is definitely one of those, because it tracks inverse to ARKK. I always say AARK. It's like AARP. ARKK. So, there are ways to find that. And that leads into, again, what we talked about at the top. And that is that Adam has been working diligently, very hard, spending a lot of time and effort developing a strategy that finds things like this, where you are, meeting that momentum principle. You're buying high, but not necessarily at a very high. But you're doing this coming out of market conditions like this, and then coming up on June 9th, he's going to explain exactly what that means. And I definitely encourage anyone who's interested to sign up. It's the link we'll provide you up top. We'll give you VIP access to this presentation. So it's very exclusive. We're not opening this up to everyone. And we want to make sure that that you, our audience, have access to what Adam has to say. It's coming up June 9th, 4 o'clock. But yeah, 4 p.m. Eastern time, you can find out much more about this, where we're using current market conditions. We've seen how things perform in past conditions very similar to what we see today, and we've developed a system that finds these the potential to find winners that are just going to knock it out of the park on the rebound, which is going to happen. The market doesn't stay down, it doesn't stay up. There will be a rebound coming. So, Adam, I don't know if you have any other parting shots to leave off with.
You said it very well. I think the biggest thing is don't freeze. This is not a market where you need to, just wait and see. If you have a strategy, you need to follow that strategy. And that's what we're here for. I mean, myself, Matt, Charles, we have been doing this for decades. We have proven systematic rules-based strategies that we follow with much discipline. And we are keeping a cool head and calm hands and just really guiding our readers through this time. So we see this as an opportunity. We understand the psychology of trading through a bear market, because a lot of folks get scared, but really now is the time. I mean, these are windows of opportunity that only come around, I'll say, once a decade. And if you don't act now, then I believe you're going to be regretting it, 1 to 3 years down the road. So really now's the time to act. And that's really why we fast tracked this new strategy of mine. I think it's the perfect market for getting into these stock purchases. So I hope everybody will sign up. And
we've seen it before. I mean, this isn't one of those things that's it's not new. We've seen these patterns develop before, and we've seen big gain winners come out of these types of patterns. So we know what happens. We know it happens, and now we've developed a way to find out how that works and how we can pinpoint those winners early on to where you get maximum gain in your portfolio. So again, it's coming up on the 9th. And it'll be at 4 o'clock Eastern. We'll put a link up top, VIP link just for you, so you can click and find out more information. So please do that. Again, if you do have any questions for Adam, Charles, myself, any of our team, whether it be on a particular stock or the broader market, maybe economics, whatever you want to look at, just ask away. You can email us. The email address is feedback@moneymarkets.com. We'll put that right down below, or you can comment below here on our YouTube channel. We'd love to see your feedback. We'd love to see what you have to say. Adam, I think that's it. I think it's great. It was a pleasure having you on again this week. Look forward to doing it again next week.
Sounds great. Thanks so much.